As we begin 2024, I believe GM is well positioned for a year of strong financial performance that builds on everything we accomplished and importantly learned in 2023. At GM, we expect healthy industry sales of about 16 million units. We have an unmatched ICE portfolio in North America, rising EV production on the Ultium platform, and GM Financial continues to perform well. In 2023, GM sold more vehicles in the U.S. than anyone else. All of our U.S. brands grew their sales year over year, and we gained U.S. market share with healthy margins thanks to stable pricing and incentives that were more than 20% below the industry average. And we have passed Honda and Toyota in the most affordable quadrant thanks to attractive and profitable vehicles. All of this success contributed to full-year EBIT adjusted of $12.4 billion and adjusted auto free cash flow of $11.7 billion in 2023, which brings our total to more than $22 billion for 22 and 23. Almost two-thirds of that cash is being returned to shareholders through dividends and share repurchases. In our EV business, we expect our U.S. portfolio to be variable profit positive in the second half of the year based on our current expectations for EV demand and production growth. Our plan is to produce and wholesale 200,000 to 300,000 Ultium-based Chevrolet, GMC, Cadillac, and Brake-Drop EVs in North America this year, but we will be guided by customer demand. We also have more than 100,000 reservations and orders for EV pickups that we expect to fulfill in 24 and 25. However, if demand conditions change, we'll take advantage of our manufacturing flexibility in Spring Hill and Ramos to build more ICE models and fewer EVs. We can also mix between different EV products at Factory Zero. Ultimately, we will follow the customer. This change means that new production going forward of the Chevrolet Blazer EV and the Cadillac Lyriq will qualify for the full $7,500 consumer credit. By making more equipment standard in trim series with logical price walks, we can eliminate literally thousands of unique part numbers and dozens of software releases, which is reducing hardware, software, ordering, and manufacturing complexity, and importantly, all the costs associated with them.
So I'm just curious, as you think about strategy and the position of the company, you haven't been shy from making big changes in the past, like exiting Europe. Can we think about the potential for real shifts in strategy to focus where the highest margin and highest return is sort of in the business truly 5 to 10 years down the line, which might include things like exiting China, which sounds like heresy, but might be the best move to make?
China, as Paul mentioned, there's tremendous changing, not only from a technology point of view, but a competitive point of view. And so we're evaluating China. We think there's a place to play. It is a tremendous growth opportunity if we can do that well, and that's our goal. But nothing is off the table in ensuring that GM has a strong future to generate the right profitability and the right return for our investors.
And on the other point, if I didn't make it earlier on the lower battery raw material costs, keep in mind that we don't start to see meaningful benefit from that until we get to the middle part of the year, because a lot of the cells that we have in inventory were built with higher raw materials costs. So while we're producing cells today, we're going first in, first out on the cells. So we have a little bit of a lag before we realize that lower battery raw material cost of about $4,000 a vehicle that we articulated will also have some annualization benefits in 2025, since we're not getting the full benefit here in 24. I hope that's helpful.
And thanks everybody for your questions. I'd like to share just a couple thoughts before we close. Fundamentally, we believe we are well positioned to have a strong year thanks to our success in high margin and growing ICE segments, our expanding EV portfolio, our cost discipline, and our continuous improvements to design, engineering, supply chain, manufacturing, and marketing process improvements. In addition, we are prioritizing the return of cash to our shareholders on a consistent basis as we execute the plan. We know we must execute in every part of the business in 24, not just ICE, and I can assure you we will. So thank you for your continued support and for joining today's call, and please stay safe.